Relief is finally coming for car buyers. KSBY News reporter Kimberly Cruz has details on the price shifting that's happening both in the new and used car markets.
The U.S. new car market has swung from an era of shortage and markups to a glut of vehicles and deep discounts. After years of barely finding a new SUV or truck to buy, dealers are now sitting on roughly $867 billion in unsold inventory. That enormous stockpile comes with heavy costs. Dealers report spending well over $100,000 per month in interest just to finance these idle vehicles. At the same time, record-high loan rates have sent the average monthly auto payment to around $760 or more, pricing many buyers out. In short, the old rules have flipped. Factories and dealers are now hustling to move metal, and buyers finally have the leverage. Today's buyers face a very different landscape. Back in 2020 to 2022, scarcity was the strategy. Most new cars sold at or above sticker price, and incentives vanished. But that has changed. Dealership lots are brimming with SUVs, trucks, and increasingly EVs. To make sense of it, let's look brand by brand at how the big automakers are reacting and what it means for shoppers. Ford was one of the biggest winners of the last few years' bonanza. Its profits surged as it built fewer vehicles but sold them at rich prices. However, by late 2023, the tables turned. Ford has cut production sharply. For example, assembly lines have slowed or paused, and even the electric F-150 Lightning plant was idled into 2024. The goal is to trim inventory before it gets worse. On the lot, that means Ford is offering incentives unheard of until recently. Popular trucks and SUVs have thick rebates. For instance, Ford dealers advertised $7,500 in factory incentives on new F-150 trucks, and some XLT models are now selling for under $40,000, a price level not seen since before 2022. Even lease deals are back. One store ran zero down, $399 per month. Explorer leases plus bonus cash for loyal Ford customers. Lincolns have similar deals, if you ask. In other words, Ford buyers who were once pay up or wait now have real negotiating power. The manufacturer is pushing cash and 0% offers to clear inventory. Interest costs are biting Ford dealers too. The industry report notes that Ford, like others, has far more inventory than normal, so unsold F-150s and Broncos accrue fees every day. That pressure means sales staff are now incentivized to price aggressively. In short, after years of Ford asking, if you don't want it, someone else will, the script is flipped. Ford's shift to prioritize profit per vehicle over volume has left it with excess stock. And that's good news if you're looking for a deal on a new Ford. GM's story is similar. In 2021 to 2022, it enjoyed soaring margins, reportedly a 55% jump in net income by selling fewer cars at higher prices. Now, like Ford, GM is trimming output at plants. Late last year, GM extended downtime at some of its full-size truck factories. The result? Dealers have begun aggressively cutting prices on popular models. Among GM's brands, Chevrolet trucks and SUVs are leading the discounts. Chevrolet dealers are stacking rebates on full-size models, slashing $8,000 to $13,000 off Silverado pickups and Tahoe SUVs just to clear space. Crossovers like the Blazer and Traverse have lease deals under $350 per month with nothing down. Even high-mileage used SUVs are now getting big cashbacks and extras that would have been unthinkable a year ago. GM's electrics aren't left out. The Bolt EV, for example, had over $12,500 off on a single day, plus up to $7,500 in federal credits. That can put a brand new Chevy Bolt for under $25,000 all in, less than many used compacts. And Cadillac, GM's luxury arm, is offering stacked incentives on models like the Lyriq EV. Residents sometimes end up paying less for one than they would for a mainstream Honda CR-V. In short, GM is fighting to move inventory. Buyers can now shop Chevy and Cadillac showrooms knowing that rebates, bonus cash, and low-rate financing are on the table. Stellantis, the company that makes Jeep, Ram, Dodge, Chrysler, and others, is feeling the pinch too. Like Ford and GM, Stellantis rode the profit wave by cutting output, but now it's reversing course. The company announced thousands of layoffs late 2023, about 15,000 jobs cut, and shut down production shifts to deal with too much inventory. Dealers can't afford to wait. The impact on truck buyers is huge. Ram 1,500 pickups, once almost impossible to buy quickly, have come under fierce discounting. Dealers are throwing in 0% financing for 60 months plus $10,000 off on many Ram 1,500 models. Jeep and Dodge SUVs have similar stories. For months, they've advertised big rebates and loan deals to drive sales. Even family minivans like the Chrysler Pacifica are often available with thousands off for special financing, a reversal from the scarcity pricing of the past. Overall, Stellantis brands had among the highest inventory levels by early 2024, so the incentives are deep. The old no-haggle approach is gone. Now Stellantis dealers know moving a vehicle at a loss is better than paying still more in financing costs. For buyers, that means Stellantis is effectively begging for your business with cash and deal packages. Not every manufacturer is overstocked. In particular, Toyota and its luxury brand Lexus has kept a very tight supply. Inventory reports showed Toyota with some of the lowest days of supply in early 2024. That means Toyota's lots are still relatively sparse compared to the Detroit automakers. In practice, Toyota has been more cautious about discounts. You'll still find the usual incentives on Hondas and some Toyotas, but not the fire sale deals seen elsewhere. That said, even Toyota's trucks have felt the pressure. For example, a loaded 2024 Tacoma TRD Sport was found for about $6,000 below its invoice price, a level unheard of 2 years ago. Used Toyotas, once considered recession-proof, are also seeing markdowns. But overall, Toyota and Honda have largely been able to avoid the brink because they built to a lean plan. Industry data notes: Toyota Yaris models had only about 13 days supply at year-end 2023. If you're buying Japanese brand, deals will be less dramatic, but the strong pricing elsewhere may finally pull Toyota off its no-discount perch before long. What about electric vehicles? Tesla's been famously disciplined on pricing, but even it is now adjusting. A recent example: last year's $70,000 Model Y can be had new for around $54,000 with zero down and a sub-$500 lease payment. In other words, a roughly 20 to 25% price cut from the 2022 price. Tesla owners can also find factory leases and occasional inventory rebates, a far cry from the no-incentive stance of the immediate past. Startups and luxury EVs are also cutting prices. Rivian, the electric truck/SUV maker, offered $10,000 off its R1T pickup to move vehicles off dealer lots. Chevrolet's Bolt EV had enormous discounts. Even new arrivals like the Ford Mustang Mach-E and Hyundai Ioniq 5 have seen four-figure rebates. Cadillac's Lyriq and Lucid Air sedans are in similar territory, with big discounts and bundled deals now available. In short, electric vehicles, once the hottest market, are now being heavily discounted to build volume. Any EV buyer with good timing can find lease deals, tax credit stacking, and cash incentives that were unthinkable a year ago. After years of take-it-or-leave-it pricing, the power is now with the buyer. Automakers have boosted prices and squirreled away profit, but they've overdone it. With inventory swelling, recent analyses speak of a $340 day supply of new cars, and finance costs rising. They've been forced to flood the market with incentives. Dealers are practically tripping over unsold vehicles, so almost every discount, rebate, or special offer is on the table. For everyday shoppers, this is good news. It means bargaining chips like full coverage warranties, free servicing, and trade-in bonuses are suddenly fair game. Negotiation isn't nearly as uphill as it was in 2021. If you're patient and shop around, even a quieter luxury dealership might be willing to beat its own sticker. You can save thousands. The days when you had to accept a $5,000 markup or a 6-month wait are over. In practical terms, shop now, and don't be shy about asking for every available available deal. Check incentives directly on manufacturer sites and local dealer ads. Ask about rebates or loyalty bonuses and be willing to walk away if a deal isn't there. Also, consider looking slightly above or below your original target model. Dealers may have a glut of one trim versus another. The market's moved from favoring dealers to favoring buyers, so use that leverage. The bottom line, the car companies have grown tired of their profits and real-world limits have set in. You're in a rare position. If you play it smart, you could end up paying far less and financing at a better rate than anyone expected just a year ago. In the current landscape of abundant SUVs, trucks, and EVs, the consumer's revenge is real, and it shows up on your invoice. Stay tuned and subscribe for more inside stories from the American auto industry you won't hear on the nightly news.